This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. I'm Carol Massar, along with David Gura, of course. He is Bloomberg News correspondent, host of the Bloomberg Big Take podcast, in for Tim this week. And I got to say, David, when we're kind of getting ready for this hour, I kind of thought I had it figured out. And then all of a sudden we had some, concerns about some of the banks out there.
Concerned about these regional banks. We're going to get into that in more detail, and then political news as well. We knew that President Zelenskiy, making his way to Washington for a meeting with President Trump, didn't expect the 2-hour-plus phone call that President Trump had with President Putin earlier today.
That's pretty long.
We'll dig into that as well.
I'm assuming there's translation going on back and forth, but still, right?
Yeah, it's a long time, and we've gotten a short update on Truth Social about what they discussed. Maybe a meeting in Budapest down the line, but nothing more beyond that. So we'll see what we hear from the White House and from President Putin's camp as well.
All right, we're going to get into all of that over the next 60 minutes. We're also going to hear from Fed Governor Chris Waller on Fed policy and something odd that's going on in the U.S. labor market. He talked with our own Tom Keene in a big discussion. I think, was it a half an hour? They talked for a long time.
Yeah, there was a speech at the top, and then the two of them talked for about half an hour, took a few questions from the audience there at the Council on Foreign Relations, building on the conversation he had earlier with Bloomberg Television and Radio. So a lot of new insight into Chris Waller, who, of course, we know is in the running to be the successor to Jay Powell, the next Fed chair. So some interesting stuff there for sure.
We're also going to head to D.C. Lisa Abramowicz at the IMF meeting. She is talking with Israeli Central Bank Governor Amir Yaron. We'll hear from that. And also something a little bit different, MIT. We're going to go there. Microscopic technologies that work inside the human body. Hopefully going to fix out everything and figure out things and maybe advance healthcare, right? The future. Hey, let's get a check on the trading day. Let's toss things over to Charlie Pellet. Charlie, a little bit of a switch in the tone in the markets here.
Indeed, a lot of red right now. Carol Massar, the Dow, the S&P, NASDAQ 100 index, Russell 2000, Bloomberg Mag 7 index. They are all trading lower. Bottom line here, stocks are sputtering as two regional banks get hit. We'll have a whole lot more on that in a moment, but those two regional banks, Zion's Bancorp down now by 10.7%, and Western Alliance Bancorp also down by 10%. We've got the S&P down 35, now down 0.5%. The Dow also lower by 0.5%. NASDAQ down 0.4%. Our Mag 7 index down 0.5%. The 10-year at 3.98%, with a 2-year that's yielding 3.43%. Gold is surging another $85 the ounce, $42.93, up by 2%. And silver also rallying, closing in on $54 now, $53.90 silver, up by 1.6%. Bitcoin down 2.8%. Bitcoin, 108,078 on Bitcoin. Bank earnings, Bank of New York Mellon's third quarter profit trounced analyst projections. Shares of Bank of New York Mellon right now trading lower by 1%. Schwab also out with earnings down up 0.2%. And shares of U.S. Bancorp, they're down by 0.5%. So bottom line here, two regional banks getting hits, stocks selling off, S&P down 35, down 0.5%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie's setting us up so well for our first discussion. By the way, the Spider S&P Regional Banking Index is down just off its lows, but down about 5%. So the whole regional banking sector taking a bit of a hit on that news about Zion's and also Western Alliance. Let's get to it with Bloomberg News U.S. Finance Team Leader Sally Bakewell back here in our studio. So, Sally, this kind of felt like it came out of nowhere, but what's going on? What do we know right now?
Right. So we have these two regional banks, Zion's and Western Alliance, and shares of those are tumbling today after they said that they were victims of fraud on loans tied to the same borrowers. And those have both forced charge-offs on the debt. And it's also fueling a lot of concern, which is, I think, what we're seeing in the broader sector, that there are more cracks emerging in credit markets.
You used the phrase cracks. We were doing some market entomology yesterday, picking up on what Jamie Dimon said about the potential of there being more than one cockroach in the environment. And I wonder wonder sort of how we should look at these two events and complement both the comments that he made about the bankruptcies that we've seen and this latest news about these two regional banks.
Well, they still remain quite isolated incidents as far as we can tell. So the borrowers in this case, they were not First Brands, they were not Tricolor, but a group of investment funds, it seems, that have faced a number of fraud charges. But yes, while they appear to be isolated events, of course, this feeds very much into Jamie Dimon's comments of are people doing the right amount of due diligence on borrowers in this kind of late cycle moment in the economy where credit spreads are very tight and valuations are high. That's the kind of environment that encourages a lot of dodgy behavior and froth. And are these borrowers examples of that? So that's the through line, even if they're isolated incidents.
I don't want to jump to conclusions or like get ahead of ourselves, but I just think about during the great financial crisis in the lead up where there, instances where people said, well, it's just isolated, incidences. So I'm just wondering, again, what are you keeping a watch on? Other banks? Like, how are you guys figuring out whether this is indeed isolated or there's something more? I mean, and our regulators, are we expected to hear from regulators on this?
Well, this is the interesting thing with the smaller, in terms of what we're looking at, these are smaller banks.
Right.
So, JP Morgan took this 170 million charge tied to Tricolor, the subprime auto lender that collapsed in very dramatic fashion. That meant nothing to the bank. And actually, to be fair to Zions and Western Alliance, it doesn't seem like this is going to be a huge issue to either of them, even though, the shares are down. But for smaller banks, a hit like this is obviously much more consequential. And so if lots of smaller banks are experiencing borrowers, particularly, borrowers that are connected to the subprime or lower income consumer or lower income consumer, then, it could fuel a lot more pain. And actually, Jamie Dimon said that too, that if there are, so many of these borrowers have been able to load up on debt that when things start to turn, it's going to be worse and a lot more painful.
Lastly here, a stark change in tone from the conversation we were having with you yesterday about the big banks and their prospects, how they did in the third quarter as well. As we look ahead now to earnings season, which will involve, of course, a lot of these smaller and mid-sized regional banks as well, how much does this color conversation, what we expect to hear from bank executives as they do those earnings calls?
Yeah, I think it hugely colors it because they will be asked about this. They will have to disclose this kind of thing. Maybe they feel a bit of cover now that some of these banks have disclosed this, but I think it's going to be one of the number one things that investors are looking for as smaller banks.
Well, it's fascinating to watch kind of the market trade over here. We're taking another leg down. And again, what we've seen along the U.S. yield curve, we've seen a 10-year go back below 4%, that 2-year note with a yield of 3.42. So you've got to expect, depending on where this goes, if it's not isolated, the Fed's got to be watching this as well as it gets ready for its next meeting. Sally, thank you so much.
Great to see you.
News U.S. Finance Team Leader Sally Bakewell. All right, so we're keeping a watch on the regional banks, and banks are generally, as we said, monitoring what comes next from the Fed. Fed Chair Jay Powell signaled earlier this week that officials are on track to lower borrowing costs by a quarter point when they meet at the end of this month. And then, David, of course, Tom Keene catching up with a key member of the Fed.
Yeah, he sat down with Christopher Waller, governor of the Federal Reserve Board, this morning for a discussion at the Council on Foreign Relations here in New York City. That was on the heels of an interview that he gave to Bloomberg Radio and Television a little bit earlier in the day. And of course, there's so much fascination about each and every one of these Fed governors who are voting members, of course, and voting members who are regional Fed presidents as well. Christopher Waller, especially interesting because he's on this short list that we know the president and the Treasury Secretary are looking at for who might succeed Jay Powell in the future. So among the topics that they discussed, Chris Waller and Tom Keene this morning, was the importance of dissent and diversity of thought at the U.S. Central Bank. Let's take a listen.
One of the criticisms that's been leveled at the Fed for a long time is we engage in groupthink. Every policy decision is a 12-0 vote. There's no dissents. And that if you're all going to do exactly the same thing and think the same way, we don't need 19 of you. We need one. But what I always try to point out is it's through speeches and public speaking that everybody presents their views, and you can go out and listen, and they're not the same. So all the public speaking, the speeches are the way for us to show a diversity of opinions and thought about the direction of policy. This is a good thing. It's not a bad thing. Despite people saying it's a cornucopia of noise, It's actually signaling where people stand. When you come to the meeting, and I always try to stress this to people, we have to make a decision every 6 weeks. We do not get to kick the can down the road. And what that implies is that to get a reasonable, consistent opinion, we have to kind of compromise. You have to come to a decision. And that's why our votes are often 12-0, 11-1. It's because we all understand we have to compromise somewhat on our positions to have a clear, consistent policy setting for markets and the American people.
Larry Meyer, Washington University, St. Louis, had a small book out of his time with Greenspan, a term at the Fed, and he was heated about the consensus vote, the need for consensus. Should we be more like the Bank of England, which seems like a fist fight every 6 weeks?
Yeah, I'd like to avoid the fist fight every 6 weeks. But, I mean, I personally think there's nothing wrong with dissents. It's a way to communicate differences in policy stances. You know, the whole complete consensus largely comes out of the Greenspan era, where it was like, if you have a 12-0 vote, there's no doubt about what policy should be. Everybody agreed with the chair at that time, and that kind of tradition continued. But as the Bank of England has showed, there's no point of having 19 of us if we always do the same thing. So at that point, what's wrong with having a few dissent? I dissented at the July meeting. I don't personally think that shows anything about loss of faith in the chair or not the right policy, but that's the whole point, is to say, look, I'm on this committee to have my own independent view and make these points. And that's what people are doing.
We welcome all of you again, particularly worldwide, with Christopher Waller into this audience. Ed, can I call on you first for the first question in a bit? I'll let you come up with it, but I think we need to hear from Ed Cox.
I'm giving you a little time to think about it.
He's got a little time to think about it, and I don't want to get in the way of his good first question. I'm going to ask some questions about the speech. I got to keep the assembled press happy, or they won't show up again at Council on Foreign Relations. But I want to come out of this with a little bit more knowledge about who is Christopher Waller. We'll get to that in a minute. Number one question I get, the unemployment rate's 4.x%. Is a 4.x% unemployment rate now the same as a 4.x unemployment rate when you were at Washington State?
No, I think this is where we're in this unusual situation where we have this kind of zero net immigration instead of roughly, say, 400,000 a year. Actually, people leaving the country. And this is kind of, I've said this before, it's masking this decline in labor demand. So just think about, if it's all immigration and you have a decline in labor supply, then the following things should happen. Employment will go down. Wages should be bid up if you have a labor shortage. Vacancies should go up. Quits should go up. That's what you should see with a very tight labor market and declining labor supply. When did we see that? 2022. 2021. That's what we saw, and that was a very tight labor market. If things are driven by a decline in labor demand, just kind of thinking about labor supply as constant, you'll see jobs fall. There'll be downward pressure on wages. There'll be downward pressure on vacancies. Quits rates will fall. That sounds to me more like what we're seeing in the data. So all that's happening with all the labor supply stuff is it's kind of masking the weakness of labor demand. And I've seen some estimates that if you had just kept the labor force participation rate where it was earlier, unemployment would be 4.95%.
Okay, well, that's an important touch point. I would suggest 5% is a much bigger number than 4.9%. Do you see an immediacy of the central bank and among the staff that the real unemployment rate is 5-ish and not 4.x%?
Well, that's where you got to take a position on what do you think the labor supply is doing. Is it fine that it's 4.3? Because the fact that people leave or drop out of the labor force, that's just a natural part of the economy. And therefore 4.3 is exactly reflecting things. Or do you think like I do, which is like we're seeing falling labor demand, and if it wasn't for this decline in labor supply, we would be hurting. And there'd be no doubt about cutting rates. Absolutely no discussion about it. So that's where they were in this weird thing. We've never seen falling labor demand with a big fall in labor supply at the same time. At least not in my career that I can remember.
And that, of course, is Fed Governor Chris Waller with Bloomberg's Tom Keene, co-host of Bloomberg Surveillance. That was earlier today at an event with the Council on Foreign Relations right here in New York City. Hey, we want to dig a little bit deeper into what Chris Waller had to say and really kind of how it fits into the current U.S. economic landscape. Bloomberg Radio and TV international policy and economics correspondent Michael McKee, he's there in the D.C. Bureau. He's been at the IMF meetings and more. Mike, Fed speakers out in full force. Chris Waller, not the only one. What, though, of Waller got your attention?
Well, I think basically what Chris Waller was saying, it was the same as he has been saying, that we are probably a little too tight, and that with the decline in employment, new hiring, we should probably loosen rates a little bit. What caught some analysts on Wall Street's attention was the fact that he did not promise another rate cut in December. And that's what Wall Street is expecting. We saw today that the markets have priced in 2 full rate cuts. And Waller was saying that maybe that doesn't happen. But he really wasn't saying it's not going to happen. He was saying that a good process is you do one at a time and then decide what the data are telling you to do the next time.
Mike, you and I both have anchored shows with one Tom Keene, and we know his affection for the biographical, and he alluded to that at the top of that conversation. He wanted the audience to get a better sense of who Chris Waller is. Didn't play a ton of that tape, but I wonder if you could fill in the gap for us. As the president, as Treasury Secretary Scott Bessent looks at that list of who might replace Fed Chair Jerome Powell, what does one Chris Waller offer them in terms of biography, what he's done? How does he kind of fit into the broader board of the FOMC?
Well, he is perhaps the most accomplished economist on the list. He's been doing this for quite some time, was the director of research at the St. Louis Fed. He has that Midwestern background that perhaps might appeal to the president as opposed to somebody from the coasts. He taught at Notre Dame and not at Harvard, which might also appeal to the president. And he's also got a reputation as a sort of forward thinker. Tom did ask him about that because Chris Waller has made the case, he made the case that we could bring down the unemployment rate during or post-pandemic just because there were so many jobs open and you didn't have to have a recession to do that. And he also argued that he was the first to argue that we could cut rates more aggressively right now. So there are some things that would work in his favor for the Fed chair.
You know, one thing I want to ask you, Mike, and I'm thinking about now how we're all looking all of a sudden at the regional banks, because we've certainly seen yields move on concerns about that. We're talking about Zions and Western Alliance. We just talked with our Sally Bakewell, and at this point it seems to be isolated, but nonetheless, it's got everybody thinking about where now the next problems might come from. How much would the Fed be looking into this and watching very closely?
Well, they and the OCC would be watching very closely. I'm not sure about Midwestern Alliance, but about Western Alliance, but Zions is certainly a corporation that's regulated by the Fed, the overall holding company. And they would want to know how this got by them, how this got by the bankers to, that a fraud was committed of this size. The good news is it doesn't appear that there's any kind of run on the bank, which is what we saw with Silicon Valley. And so nobody's going to have to step in with a rescue program, but it does raise more questions about regulation at a time when some Republicans on Capitol Hill have been talking about stripping the Fed of its regulatory responsibilities. So one could suppose that might come up ahead.
Mike, very quickly here, we've heard an awful lot from one Steve Myron, the gentleman who has that temporary position on the Federal Reserve Board. He's very keen to talk about his perspective on where he thinks monetary policy should go. Anything stand out to you from the comments that we've heard from him, yes, on Fox Business Today, but in other speeches as he continues to make the case here for this Fed going bigger than his colleagues want?
Well, Stephen Myron talked twice yesterday, and he's speaking 3 times today. He's taking advantage of his opportunity while on the Fed to make the president's case for these rate cuts. He hasn't said anything new. He did say that he believes we will get that December rate cut and that we should have that December rate cut. But, of course, he's talking the president's book. Just a short while ago, the Treasury Department put out its annual report on the U.S. finances. They had said they weren't going to do that until until the government shutdown is over. But they put it out in part, I think, because they wanted to make the case that they had record tariff revenues and that we paid a lot for over $1 trillion for interest on government debt. And Myron said that those are other reasons why the Fed should be cutting rates, is to bring down that interest on government debt, which would happen to a certain extent if the Fed cut rates, but not just by 25 basis points.
All right, well, the next Fed meeting on October 29th, right? That's our next focal point, it feels like, among other things. Hey, Mike, thank you, as always. Bloomberg Radio and TV international policy and economics correspondent Michael McKee. We've got IMF meetings underway.
Yes, they are underway. The IIF, the IMF, the World Bank, everybody's seemingly meeting in Washington this week, and we've been covering all of it. Our colleague, Bloomberg Surveillance co-host Lisa Abramowicz, is there. She's done a string of incredible interviews, and she has another one for us here. Lisa, we'll hand it over to you.
Thank you so much. I really appreciate it. I am here with the Bank of Israel Governor Amir Yaron. He does run the central bank. You also advise on financial policy at a time when the mood has cleared. And there is a real sense right now in Israel that something significant has shifted. How much can you count on the war truly being over when crafting policy right now?
Well, Lisa, first, thank you for having me again. It's important to understand, Israel entered very well the 7th of October. The 7th of October did negatively impact Israel in a significant way, but the Israeli economy throughout these 2 years have shown remarkable resiliency. Now we're seeing that if this agreement, we hope it proves sustainable, that will bring sort of a lasting calmness and stability, and those are conditions that are definitely can unlock a lot of growth, rapid recovery, both for Israel and maybe for the region at large.
There's a lot of debt that has been incurred during this whole endeavor. There's also inflation that's actually come in less than expected, which has opened the door maybe to the possibility that maybe you could cut rates even before the November meeting. Is that a possibility?
The first thing to say about inflation, our monetary policy has actually proved itself in the sense that in spite of the wars are usually inflationary. Inflation has converged into our target, which between 1% and 3%, all throughout maintaining financial stability, which of course is very important. This was an encouraging CPI that came in. Right now we are at 2.5%. But there are two fundamental forces that are working now with the cessation of the fighting. On the one hand, there's short of labor supply that has been there all the time. We're going to see probably some release of reserve people, and that's going to help reduce inflation. We've seen the shekel appreciate throughout time, and in particular in the last, due to the cessation of the ceasefire. Then those are basically putting downward pressure on inflation. On the other hand, the optimism is potentially bringing a boost to demand. And so with these two offsetting forces, we want to see clarity a little bit on the forces that indeed inflation is converging more firmly. And we have some encouragement by the CPI, but we want to see this continues to go. And we are, because of the uncertainty, even about the agreements and everything, when we move, we still have to move very cautiously.
There's always uncertainty, and right now globally there's a lot of uncertainty. It seems like the uncertainty is that much more heightened at a moment when you have been at war for more than 2 years, and now there's this question of what the permanent situation will be of the Defense Department also. What kind of permanent expenditures are going to have to be on the government? I'm just wondering if you have a sense of that, or if that's also one of the variables that's up in the air.
I think it is one of the variables that's up in the air. Part of it is we want to see that the ceasefire and maybe phase 2 and maybe even other normalization factors, those will all affect the long run expenditures of military potentially. At least now, from the fact that there is a ceasefire and the planning was to go and advance longer into Gaza, that saves, for the short run, some fiscal cost. But I think this is one of the big assessment in terms of our fiscal situation is what are the expenses going forward? What is the growth that we can see in the coming years, given the geopolitical situation? As I said, I think if we see stability, growth will come back. Israel tended to grow 4%. We're probably going to grow even more than that, at least in the short run. Recent economic activity in Israel showed VC money growing. We've seen credit card usage quite high. We've seen sentiment and trend surveys are being positive, and that's also related to your previous question regarding inflation, why we still have to be cautious in how we deal with our monetary policy.
Picking up on the VC flows and some of the other inbound flows from overseas, there has been some reputational damage that Israel has suffered. There have been a number of countries that have said that they're going to withdraw investments or limit investments into Israel. Have you seen those flows start to come back? Do you expect them to? Is that something that you're kind of trying to observe right now?
So first, as I said, the last 2 quarters we've seen VC money coming in a very strong way. Prior to the ceasefire, we saw some discussions on sanction, and Israel is obviously a small, open economy. We have to do everything in our power to maintain our openness, and we do that. And I think with the ceasefire and the more it lasts, we will see some of this reputational risk hopefully gets mitigated over time. And that's partly why I think this could unlock growth and bring us back to our potential and maybe even beyond.
How big is the range right now in your growth outlook? I mean, I know it's pretty wide everywhere, but for you, it's got to be extremely significant, no?
I think if you look at our last analysis, and that was before the ceasefire agreement, we basically assumed the war would kind of end at the beginning of 2026, and we assumed that growth of 2.5% in basically 25 and about 4.7 in 2026. And in some sense, what has happened now, things have shifted 1 quarter ahead. That probably improves slightly 2025. The big issue is 2026. If this is a lasting agreement, and moreover, if it develops into more normalization, which clearly some of President Trump's and us would like to get there, that could unlock even more growth in 2026 and beyond.
We're here in Washington, D.C. The last time we were here, the discussion was all around central bank independence. Now it's about a question of de-dollarization. What is the new monetary order? What's been your big takeaway from these particular meetings being here?
I think, there's a lot of discussion on the digitization and stable coins and what that might do to banking and fragility. That's one big issue. Private credit, is that a risk factor? Our asset market valuations in line? And of course, the geopolitical uncertainty, it's globally, and what that might do and what that might trigger. I don't think there are definitive answers, but those are the things that minds are trying to figure out.
From your perspective, given how significant the tech sector is in Israel, how much are you focused on the elevated valuations and the potential threat to financial stability, particularly because of how dominant that field is in Israel?
So obviously Israel's locomotive engine is the high-tech sector, and as I said, it's been very resilient. Partly because it's very well diversified now. Everybody knows we are extremely frontier in cyber, but we're also very good in medtech, fintech, defense tech now. With all the investments in defense in Europe and otherwise, we have a lot of things to offer. Agrotech. So all these areas gives us a very well diversified portfolio of high tech, and obviously, in the AI, there's a lot of strong valuation. We tend to be particularly more on the applied side. So I think time will tell how much benefits those new innovations bring in. But I think the Israeli sector in general is relatively diversified enough that it can withstand even shocks to markets in terms of the areas it is particularly placed in.
Governor Yaron, thank you so much for taking the time. Always a pleasure. That was Governor Amir Yaron of the Bank of Israel. I'll send it back to you.
Lisa, thank you very much. Lisa Abramowicz there with Amir Yaron at IMF headquarters in Washington, D.C., and a fascinating conversation, a wide-ranging one about the Israeli economy after the ceasefire that was announced last week and after, of course, 2 years of war. And what struck me from that conversation, Carol, is how he said that the monetary policy the Bank of Israel has pioneered here has proved itself. It's worked. Inflation is at 2.5%, which is within the bank's target. And then picking up on what he said there just a few moments ago, he called technology the locomotive of Israel's economy and really touted VC investment that we've seen coming in strong, as he told it, over the last 2 quarters, and other positive signs for the economy. Credit card spending is high. Sentiment is high as well. And fascinating to hear him talk just about what they've been debating and discussing over the course of this week at the IMF and World Bank annual meetings, kind of the future of central banking, looking at digitization, stablecoins, and of course, as we've been talking about yesterday and today, the role of private credit, which is a thorn in the side of some folks here over these last couple of days, as I know you've been seeing.
Yeah, and something we will certainly continue to cover here. Hey, just quick check on the markets for you folks. We are just bouncing around our lows of this session. S&P down 67 points, a 1% decline. NASDAQ 100 off about 0.9%. If I look at the S&P, all 11 major industry groups are lower today. Again, some concerns about the regional banking sector that is definitely weighing on the trade. Most notably, got to talk about what's going on in treasuries. 10-year note below 4% at 3.97, 2-year note with a yield of 3.41. So a lot coming at us. And, you know, the geopolitical certainly doesn't end there, because we had some more news, David, out of Washington between the president and President Putin. Yeah,
the two of them spoke by phone today. This wasn't previously announced. In the middle of that call, we got a post from President Trump on Truth Social indicating that the call was underway. And I think that's the first time we've kind of seen that happen. The president, I don't know if pausing the conversation, but tweeting or posting in real time that the two of them were talking. And then there was a subsequent post indicating that they'd had a conversation for about 2 hours where they discussed all manner of things, the war, of course, and maybe the prospects for another meeting with the two of them. Let's talk to Bloomberg News White House and National Security Editor Michelle Jamrisko, who's in our Bloomberg Washington, D.C. bureau. She's been tracking this story over the course of the day. Michelle, this is kind of the appetizer to an in-person conversation that's going to take place tomorrow at the White House. President Zelenskiy is going to be in Washington to meet with President Trump, and President Trump said the conversation he had today is going to inform what he says to President Zelenskiy. Get us up to speed on sort of what the contours of that conversation are likely to be tomorrow.
Yeah, well, never a dull moment over here, David. So we're following the developments minute by minute. And yes, just this morning we heard about this Putin-Trump phone call that would be slated to take place. So we did get a little bit of a preview of their later a meeting in person that Trump has forecast. But to jump ahead just to tomorrow, yes, this meeting with Volodymyr Zelenskiy is a very highly anticipated one, obviously something that Zelenskiy has been seeking for some time. We expect one centerpiece of this meeting to be the potential for the U.S. to provision Tomahawk missiles to Ukraine. At least that's Zelenskyy's wish. That is something that we expect may have come up in the conversation today between Trump and Putin, as it is something that is a highly sensitive topic, obviously, to Russia as well. And Putin himself has kind of threatens that it would the war would enter a new stage if this were to happen, if this exchange were to take place. While Zelenskiy, for his part, is obviously constantly looking for more military support that can help him end this war and end this invasion.
Yeah. Does it feel like we're moving closer to an end here? I'm trying to kind of read the back and forth here, the 2-hour phone conversation, President Zelenskiy at the White House tomorrow. And we have seen as of late, Michelle, it feels like President Trump in the White House leaning more on the side of Ukraine, but we know that can also change rather quickly. So can you kind of gauge where we are in this process and the possibility of an end, the White House playing a significant role in putting an end to this war?
Yeah, I mean, always very dangerous, as you know, Carol, to predict the end of these things. But we can say, I mean, first to your point about the evolution of this relationship between President Trump and Zelensky, that has changed quite a bit, even just this year. I mean, we all remember the Oval Office meeting that did not go well before there was the Oval Office meeting that did go well, with Zelensky at the heart of both. And I think, there is a long strain now of months-long episodes of Trump getting publicly frustrated with President Putin. And so the tide did turn in that sense. And now we seem to be kind of coming toward a middle ground, flying high off of last week's developments in the Middle East. We have a president who's even more emboldened on his peace mission, so to speak, and he's looking to do anything he can to bring a resolution to this war that he admittedly had said he would end on day one when he was back in office, and has been the most elusive of the 8 wars that he claims to have resolved. On one side, he says this one is much trickier to solve. And so he's doing everything he can to make sure that at least it looks like that things have calmed down. But we are in a war that's in its 4th year, and it's not going to be an easy end. As even Trump admits, these two leaders, Zelensky and Putin, don't seem to like each other very much. So it's going to be a bit difficult to bring them together. But we do see a lot of wheels turning in terms of new mechanics, new meetings that otherwise wouldn't have happened and would be kind of surprising to take place. But if not for Trump's willingness to kind of bring people together and at least hash things out in person.
On the phone and in person. Michelle, thank you very much. Always great to talk with you. Michelle Jamrisko is a Bloomberg News White House and national security editor, getting us up to speed on the conversation between President Putin and President Trump, setting the table for the conversation tomorrow with President Trump and President Zelensky. And I should say, we're waiting for the president to make some remarks a little later this afternoon, Carol, and he did that yesterday. No idea what's going to be on the agenda, but we'll monitor that, of course, and bring you headlines as we get them on the Bloomberg terminal. This is Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're all very much in the red right now, with the S&P down 61. That is a drop of 0.9%. NASDAQ Composite Index also down 0.9%. Dow Industrials down 0.8. We've got the VIX right now at 24. The 10-year 3.97%. The 2-year 3.42%. Gold is surging $82 the ounce to $42.90, up by 2%. West Texas Intermediate crude down 1.2%, $57.55 a barrel. Bitcoin down 2.5%. Right now, Bitcoin is at 108,361. Bottom line for the equity market, that rally is sputtering as 2 regional banks get hit hard today. Among those regional names today, Zions Bank down 13%. Also, shares of Western WAL on the ticker there. Right now, it is trading lower by 10.7%. Briefly, BBVA's $19 billion offer for Banco Sabadell rejected by a vast majority of shareholders, ending a takeover saga that has been going on for 17 months. I'm Charlie Pellet. That is a Bloomberg Business Flash.
A lot coming at us, Charlie, right?
Indeed. We're keeping an eye on it.
Man, it's a lot.
We got you covered.
You always do. All right, Charlie Pellet, thank you so much. Hey, earlier this month, Bloomberg News reported that Neuralink, that's Elon Musk's brain implant company, has submitted a scientific paper to a journal describing the results from some of its patients, which would be its first peer-reviewed publication with human data. David, when I look at medicine, I feel like AI is going to maybe help things and be able to kind of crunch a lot of data and figure out some treatments. But it's interesting to see like brain-computer interfaces and what Elon's doing and some others when it comes to maybe the types of treatments we're going to be getting in the future.
Our next guest and her team are microscopic technologists that work inside the human body. That's what she's pioneering.
Yeah.
It's so fascinating. And I'm eager just to talk about sort of what A, they're working on, B, what the prospects are for doing kind of more of this stuff going forward.
Yeah, she's a great person. Let's get to our weekly Business Week Women's Health segment, where we do focus on key issues and developing technologies impacting the present and future of women's health around the world and really health overall. With us is Professor Deblina Sarkar. She is Associate Professor at MIT. She heads the Nano Cybernetic Biotrek Research Group at the MIT Media Lab, which I want to understand exactly what they're doing. And she joins David and me from Cambridge. Professor Sarkar, so nice to have you here on Bloomberg Business Week. What exactly is the work you guys are doing? What are microscopic technologies that are working inside the human body or will work inside the human body?
Yeah, very excited to be here today as well. So what you are doing in our group, we are fusing the fields of electronics, specifically nanoelectronics, with applied physics and biology to build tiny nanoelectronic chips which can seamlessly integrate with our body and brain. This can diagnose disease or treat diseases which even drugs cannot fix. So one example of such a technology we have built is the world's first autonomous and non-surgical brain implant. So existing brain implants require creating a hole in the skull and putting a centimeter scale probe in. That's highly invasive, and because of the surgery-related risks and hundreds and $1,000s of surgery costs, that's only limited to less than 1% of the patients. So millions of people suffering from devastating neurological conditions have impossible choices, either to go through this very risky brain surgery or live with debilitating symptoms which drugs cannot fix. So to overcome these challenges, what we have built are tiny electronic devices which can travel through our body fluids. They can autonomously recognize a disease region in the brain, disease regions which may not be even visible through imaging technologies. And these devices can self-implant in these disease regions. And then we wirelessly power these devices to provide precise electrical stimulation to treat diseases which are even resistant to drugs. So while existing technologies, as I mentioned, are only limited to less than 1% of the patients because of surgery-related risks and costs, we are breaking the barriers of age, health risks, and costs which are currently preventing millions from getting treatments. So we envision a future where these life-saving technologies will be accessible to all.
Help me understand where we are in this process. So part of what you described sounds so fantastical, sounds like it stands to upend or radically change the way that we pursue medicine. Are we at the conceptual stage here? What have you been able to sort of prove as concept here as you've been working on these technologies?
We have already demonstrated this technology very robustly in animals already. So we have already built these tiny nanoelectronic devices. We have shown right now that they have record power conversion efficiency, so they can work deep inside the brain. We have also demonstrated that they have the capability of traveling through the body fluids, autonomously recognize a target region in the brain. Also, we have shown that they can very precisely electrically stimulate the brain. So these are already demonstrated in our animal models. A paper is actually will be coming out in few weeks, and we are also translating these technologies, very interested in translating these technologies to humans. So we have not only shown this as a platform technologies to stimulate this brain, but we have also results in multiple diseases.
Professor Sarkar, because we only have about 3 minutes or so left, I just want to jump ahead. So what do you envision in the future, that all of us get an implant or something and it's kind of moving around our body, detecting things, or how might this play out? And I am curious about what it would cost.
So electronics now will, is so cheap that you can have it in your shoes. Millions of these devices can be made with less than $10. So as I mentioned that in our lab, we have already shown this technology is helpful for multiple diseases, including brain cancer, chronic pain, and Alzheimer's. In the area of brain cancer, and then we work with terminal cancers like glioblastoma or DIPG, where these are terminal cancers, means the patients, when they're diagnosed with these cancers, they have no other hope. Radiation does not work. Chemotherapy does not work. People die within 12 to 18 months. We have shown that with our technology, with precise bioelectrical stimulation, you can completely halt the growth of brain cancer where other technologies will not work. Wow. That can increase the survival rate of patients to more than 85%. Also in Alzheimer's disease, we have shown that you can prevent the formation of the Alzheimer's itself. So it can lead to preventative technology.
Which would be unbelievable, because I feel like there's certain diseases out there, right? And that all of the medical world and pharmaceutical industry is trying to figure out how to deal with. Having said that, in this segment, we often talk about the gaps that are out there in terms of women's health, the spending on R&D, the gaps that are out there. How might this help in terms of diagnosing things that are certainly specific to women only?
Yeah, so taking the example of brain cancer, so if you think of breast cancer, that is horrible. But when breast cancer metastasizes to the brain, currently there is no cure. It becomes terminal. And our work on brain cancer showing that you can completely halt the growth of brain cancer, that is helpful for women. For Alzheimer's disease as well, women are actually at twice the risk of getting any kind of neurodegenerative diseases compared to men. So all these technologies we are building are also very, very relevant to women. And I should also mention that all our work are actually being supported by family members of patients, family members who have suffered a loss of their near and dear ones.
Yeah.
So we feel very supported. And for example, recently I got an email from a father who was talking about his 10-year-old daughter who has this terminal brain cancer called DIPG, and just seeing his daughter going to a certain death. So you're very committed and dedicated to taking this technology to humans, and we plan to start clinical trials in the next 3 years.
Well, certainly stay in touch and let us know how it's going. We really appreciate it. Professor Deblina Sarkar, Associate Professor at MIT, heading the Nanocybernetic Biotech Research Group at the MIT Media Lab. Hey, David, looking at shares of Apple, still down on the day, but we did see them pop a little bit higher.
Yeah, Mark Gurman here with an exclusive indicating Apple is preparing to finally launch a touchscreen version of its Mac computer. This is so fascinating because it's something that I think Steve Jobs was adamantly against, that there should be a separation between these two types of technology. Looks like that's likely to change.
My family makes fun of me because I get so used to and then they're like, Mom, it doesn't work that way.
Just imagine.
It's really humiliating. All right, do not go anywhere. Carol Massar, David Gura, we're going to get a check on some of the stocks on the move, a day where we see stocks overall under pressure. This is Bloomberg Businessweek Daily.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're coming up on the last hour of trading. Carol Massar, David Gura, here at Bloomberg headquarters in New York City, looking at a market where we are just coming off our lows of the session, but down about 0.7% on the S&P 500, and we are down about 0.5% on the NASDAQ 100. I am Carol Massar, along with David Gura. Let's get a check on some of the stocks on the move. Bloomberg News senior reporter and deputy team leader for U.S. equities, Jess Menton, here with us. In a market where there feels like it's running out of a little bit of steam, we do have some that have really outperformed today.
Yes, so going to point out to the best performer in the S&P 500. So JB Hunt, the ticker is JBHT. So this is important because not only is it a trucking and logistics company, but it's a bellwether for the U.S. freight market. So it's up almost 22%. So on pace for its best day since January of 1998. So that's some big size and scope there. So it's its biggest
98
drop. Yes,
I don't know. What were you
almost
doing?
30
what were
years
you
ago.
Doing? That's a long time.
I was alive then, believe it or not.
Oh, there you go.
I know you always try to ask me that question. You did this one time when we were co-hosting together.
For the record.
No, I was probably almost in middle school.
Were you really?
Yeah. I think, surprise, surprise.
Still a kid.
Silently sip my water.
Yeah, shut up over
I want
there.
to put in context, though. So this stock, even though really big size and scope there, still down 19% year to date through yesterday's close. So if you look at today's gains, it still puts it down just roughly close to about 2% for this year. So really on the back of better than expected quarterly results, also some cost controls there that are boosting that. So that's important too.
They've had some excess capacity. They've been really working off over the last couple of years.
And the big thing is, and to your point, Carol, back in January, they had actually warned that this could be another year where they lose as far as what had happened with cargo. And basically, it actually broke with its tradition of giving that forward guidance at the beginning of the year. So it was saying that analysts need to bring down some of those earnings estimates. But the fact that you have a bellwether like this, a few quarters later coming in better than expected, that's helpful for the market. So if you look over at some of its peers, whether it's Schneider National, Warner Enterprises, Knight Swift, you're seeing all those stocks taking a boost here today.
1998, I was not quite yet at Bloomberg, but I was almost at Bloomberg.
There you go. Middle school. Middle school.
Love you, David. All right, where do we go next?
So I'm going to look on the other side of things here with the MOV function in the terminal. And so looking at HPE here, so Hewlett-Packard Enterprises, the ticker is HPE if you look at this stock, and how it's moving today, down almost 10%, so on pace for its worst day since April 3rd. So of course, this is one of the largest makers of computer equipment. So looking at this, unfortunately, its annual profit forecast misestimates. It's having an issue with some of that margin crunch. Also, the stock had gained about 17% year to date through yesterday's close. So still, when you're comparing that to some of its peers, still better than expected. But also, if you're looking at the industry group, where it houses a lot of those technology hardware and storage companies
It had
today.
a margin crunch with the AI spend?
Even despite some of that. So it is interesting because, unfortunately, it's underwhelming guidance for the fiscal year that is for basically the end of next October. So its adjusted earnings per share, it was expecting it to come in between about $2.20 and $2.40. So the analyst consensus estimate was closer toward the high end of that range, but its revenue growth range was between 5 and 10%. So analysts had actually anticipated more than that, closer to 17%. So that's why you're seeing some of those shares pressured there. But if you're looking at some of its industry peers and how they're performing in that sub-industry group, in the S&P 500, that group's down about 1% right now.
Still going through some growing pains with that merger with Juniper Networks as well, I think, figuring out how to align both those companies together.
And then, of course, also one of the worst performers, though, in the S&P 500 is 5 Inc. FFIV is the ticker on there. I was just going to quickly point that out just because that's down 11% today. So if you look over the last 2 days, especially on the back of what it was talking about, where it did warn about the catastrophic hacks yesterday.
Oh, right, that's right.
Actually, that stock's down close to 15% over the last 2 trading sessions. So that would be its worst 2-day span since April of 2022. So that was just some quickly size and scope for another underperformer here today.
It's become an ugly chart.
Yes.
It is.
Micron?
Yes, Micron. So I wanted to look at some other potential bright spots, though, even though I got through some of the underperformers here. So Micron Technology, MU, is the ticker, up about 5%, on pace for its best day since not that long ago, October 13th. If you're looking at that, though, in the NASDAQ 100 in the MOV function, that is the best performer in that index. And so UBS actually raised its price target. So it said that Micron will get a boost from its memory chip storage. Of course, that's really important when you're thinking about chip makers. Obviously, this is on the memory side. It's a little bit different than what obviously NVIDIA is doing, but this stock actually had already surged around 140% this year, so it was well over 100% gains year to date, even before this upgrade came out. And so then you have Citi research analyst Christopher Danley. He actually still sees more gains in sight despite what this stock has done, so not surprisingly on high AI demand. So you're still seeing some bullish targets there. And then the stocks, though, not really doing a whole lot, even though it houses some other tickers like NVIDIA in there and Intel, but still nonetheless, you're seeing Micron Technology.
Stocks is up almost 40% year to date.
Yeah.
I mean, that my whole
it's been quite a run for the stocks.
in those names. Jess, thanks so much. Bloomberg News senior reporter and deputy team leader for U.S. Equities, Jess Menton, right here in studio. Hey, check out our Stock Movers podcast, 5-minute episodes, biggest winners and losers in the market. You can find it on Apple, Spotify, or anywhere you get your podcasts. First hour down.
First hour down, 2 to go.
Not that
as
you're
I
counting.
say, President Trump scheduled to make an announcement here in the coming minutes. We'll monitor that. And as I said, we're going to talk about airlines, especially United, which reported yesterday while we were on air. I think it's a blur. I think they reported yesterday when we were on air.
They did. It was after the close.
Ish, whatever.
You're watching on TV. The close is coming your way. Dave and I continue right here on Bloomberg.